The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning, just after 9 a.m. Eastern Time. We got about 30 minutes to go until the start of trading, and it's been a wild week, folks. I imagine it's going to be a wild Friday in the markets as well. We got a non-farm payroll pretty much in line with expectations. You get the market chopping around. We're coming into almost pre-market session lows right now. Nasdaq was down about 1%. We got back to almost even following the jobs number. Just like that, you're down almost 1% in the Nasdaq. S&Ps right now, you're trading at 41.13. The actual tick low at 3:30 p.m. Eastern Time, just under 4,100, 4,099.25. So we're just right near that level. Putting things on a 5-minute real quick. That's a 30-minute. You see the escalation we've had. A brief acceleration to 41.50, and then boom, the market drops 40 points. We're right near the session lows. We're actually below where we were at 7:30. Nasdaq 100, we're negative 130 points. You're talking about within about 20 points of the lows we had yesterday. 12,730. You're a solid 800 plus points off of where we were 36 hours ago. Man, times change quickly. Dow this morning off 200 points, 32,706. Bitcoin, how about a 35,000 handle to end the day yesterday? And we are right near that as well. Maybe during one of these breaks, I'll pull it up. I've thrown it in the Tiger's Den before. Be interested to see what the correlation is like right now with Bitcoin and the Nasdaq 100. Been very heavily correlated recently. You're trading Bitcoin, you're basically trading the Qs. We'll see if that still holds. Crude, 109.14. We make a high of 111 yesterday. We were almost back up to that price point at about 6 a.m. You have gold selling off. 1876 we just hit. We're up at 1890 on that jobs number at 8:30, and you jump to notes and bonds. And what are we seeing, folks? We're seeing lower price and higher yield, and just like that, we got the 10-year. Are you ready for this? 3.12%. 3.123. So just above 3.12%. What happened to 2.5? What happened to 3? 3.12%. You got the 10-year trading down an additional 13 ticks. And folks, we just traded down from, we were in positive territory. Okay, we were at 118.09. So you're talking about trading down 20 ticks in the last half hour on that jobs number. And the jobs number was pretty close to expectation. Okay, so you're back to the market here. Now let's go over the jobs number real quickly. 428,000 jobs added. The expectation was for 380,000. There was a small revision that led to the number for March being 428,000 as well. The unemployment rate holding at 3.6%. The market was thinking it might go to 3.5. You actually had the labor participation rate dropping. That would be the one surprise in this. Job growth was widespread, led by gains in leisure and hospitality. Total payrolls still down 1.2 million from pre-pandemic levels. So think about that, right? You're talking about 26 months ago in a healthy economy, you're adding jobs for all those 26 months. We're not even back to where we were pre-pandemic. You actually have the participation rate dropping on this report. That would be the one surprise you have in there. 39,000 was the downward revision. So that brings the headline close to the 380 when you add the two, right? The headline comes in about 428. You have a 39,000 revision. That basically makes up for the beat. One of the things out there, construction jobs rising by just 200,000, the weakest since last August. And the labor force participation rate just under where they were thinking it would actually be in terms of they're expecting that number to be rising, actually decreasing. But all things considered, okay, pretty strong number, pretty strong jobs number comes in at 8:30. So what you have to kind of try and wrap your head around is that since we had the acceleration in the S&Ps on Wednesday with Chairman Powell saying they were not discussing 75 basis points. He did say that 50 was on the table for the next couple of meetings, so I don't get what the whole hoopla was about a reprieve from higher rates. The Fed just hiked by 50. The chairman said 50 was definitely on the table for the next couple of meetings, and I would have said at least the next couple of meetings. Because if it's on the table for the next couple of meetings, folks, all that means is they're waiting for the data as it progresses for at least a couple meetings to see how they progress, what happens, jobs like data like the jobs number that we just got, wage data that we just got. We're going to get CPI next week, a big number for the Fed. So you trade up to 4,300, and just like that, we give up almost 200 points through where you were yesterday. Not almost, yeah, we gave up 200 S&P points. Folks, when you have a market that can trade up 5% and give it all back 5%, that is not strength, okay? Yeah, they're talking about in the Tiger's Den, similarities to past bear markets. The volatility in both directions, folks, is not indicative of strength. What it is indicative of is uncertainty, and the market hates uncertainty and is very uncertain of where the pricing is accurate for this market right now when we have inflation out of control. We have supply chain issues that are persisting well beyond what anybody thought, and we have a Fed that is on a hiking cycle that many of us have not seen in our lifetimes. Taking a look at the S&P, folks, yeah, we give it all back to where we were more than a year ago. So there's April 12th. But just for some context here, I put a note out to my subscribers yesterday, okay? And I said, if you're thinking about capital preservation, all right, whether it's just retirement, okay, we're going beyond trading here. Of course, you have an opportunity cost if this market pops back up to 4,500, right? 2 days ago, we had an acceleration of 3 to 4% following a Fed day. If you were out of the market, that was an opportunity cost. Today, that was not an opportunity cost. We started off the year 2019 at about 2,500, folks. We're 16 points above that price level. That's 2019, okay? Yeah, that's more than 3 years ago. But you're talking about an index that's up 1,600 points. I mean, what is that? 1,200 would be, yeah, you're talking about 60%, okay? So you start 2019 off at 2,500. You start 2020 off at 3,200. You start 2021 off at 3,700. You're sitting at 4,100. This market has the potential to go further. So just make sure that you're managing your risk appropriately, and if you are in the market, that you're not over leveraged if this market does pull back, because a 382 in the S&P is well within the realm, and that is 300 points below where we're trading at right now, let alone a 50%, which would bring it right back up to the area from August of 2020 that you first accelerated to. That would bring you back to about the 50% of the run in the S&P. Now, the Nasdaq 100, we're dropping below the 382 right now. You're down 0.8% off 106 points right now, 12,725. The 50% number on the Nasdaq 100, about 11,675. You're talking about 1,000 points below where we're trading at. Now, I think I heard a statistic today on Bloomberg that you're talking about something like 80% of Nasdaq stocks are in a bear market, and something like half of them are already off 50% from their highs. I'll have to try and pull up that number. Remarkable pullbacks within the Nasdaq. I mean, one of the strongest stocks out there in the Nasdaq is still Apple, with one of the biggest weightings. Because you take a look at the run that Apple had, okay, as we come into this break. And we'll do this, we'll finish it up when we get back, because Apple still above the 236. Many of the equities far below that number. Stay tuned, folks. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. The S&P is negative by 25 points right now. The Nasdaq 100 negative by 108. So I was talking about the Nasdaq 100, and I was going over Apple, and I was going over the number of equities that are either in a bear market. I think the statistic was pulling back 50%. But it would make sense when you have the Nasdaq 100 right now, when you look at the full run that it had from the depths of COVID. We'll zoom in on the action. You're talking about a price of $66.28. Remarkable. 12,754 is what we're sitting at right now. Now, you were up to 16,700. We are below the 382 in the Nasdaq 100. Part of the reason why you have so many equities far below where even the Nasdaq is on its pullback is because the biggest equity in the market, Apple, has held up relatively well so far. Yes, you're off of 182 and change, and how about the highs this thing made? Just touch of the 3 trillion mark, folks, right? It was 182 and change that Apple needed to hit the 3 trillion mark. Literally rung the bell to be a $3 trillion company, kicking off the acceleration to negative prices for the better part of this year, and we're coming into May already. 156.77, but you can see the Nasdaq is back, folks, to a 382. Okay, that would bring Apple back to 132. That would be $24. Now, Apple's got 16 plus billion shares outstanding, folks. So you're talking about almost $400 billion in market cap would get wiped out just if Apple was sitting. Additional market cap wiped out just if Apple was sitting at the 132.85 price point. And if you take that would bring you almost down to 2.1 trillion from 3 trillion, trading from 182 and change to 132 and change. You're sitting at 156. So be aware of the pullbacks that are happening within the Nasdaq. Nasdaq being held up actually by Apple. Not so much the case with some of the other FANG stocks. Now, Microsoft has been one of the strongest stocks out there. They might have had the strongest earnings of all, right? And look at where we are in Microsoft. You almost touched the 382. We're sitting at 277. Apple sitting percentage-wise, Microsoft would be up at about 310 from their highs, considering where you were for Apple. Right now, Microsoft down to 277. The point being, it's completely reasonable that Apple has a pullback to that degree. Now, Apple, they got a huge investment from Berkshire Hathaway, right? They are the flagship company out there as the most valuable company in the world. Maybe that's why they're holding up a little bit better. But don't think they are immune. And if they're not immune, what happens to the indices if they do get down just to that 382? Google, we're almost at the 50%. And that is not even of the full run. That's from September, okay? So let's do this, actually. Let's see where we are on that full run, because I didn't realize that was going from that, which is where the trend really began to define itself. Yeah, Google, right down to the 382. So they are right in line with the Nasdaq. Amazon, you want a lesson of what can happen to good companies, folks. Amazon accelerating past the 618 of the full acceleration from COVID, and I never thought it would be possible. And if this market has taught you anything, folks, anything is possible. You should know that in the market. I know it now. Anything is possible. Never think you're smarter. Never put all your chips in one basket, man, because you never know what could be around the corner. A little bit of a diversification and risk management. Risk management is always a wise thing, because you're talking about Amazon, man. You're down again today. You're going to open at about 2,300, and we came into COVID about 2,200. Folks, think about how our tendencies change to ramping up the online spending that we are all used to. Amazon should greatly benefit from that, especially when you think about that they do business with AWS, providing some of the backbone to the internet itself, which is something we find ourselves on more so. Now, they got some problems with growth multiples because they're Amazon. They have some problems with overspending to build out their infrastructure longer term. I think that's going to pay dividends. And you're talking about getting into Amazon now, 23.28. This thing was trading above 2,000 almost 4 years ago. But that is quite a devastating effect when you think about Amazon for 4 years barely trading to a positive territory by a few $100, considering what's going on with the online trends of consumers over that time and what's going on with AWS over that time. They have crushed it out of the park, and you're talking about almost 4 years. Okay, let's jump around to some of the other headlines that we have. So we got the jobs number out there. What do we got? Oh, this is, yeah. So my dad sent me this article this morning. As if food prices aren't high enough, the bird flu outbreak, 37 million chickens, mostly. It goes to turkeys too. No, I shouldn't say chickens mostly, but you're talking about birds, okay? Now, getting into some of the numbers here, and basically what they're saying is, if any single bird tests positive for the flu virus, they have to wipe out the whole flock. That's leading to distressing scenes across rural America with just a bunch of dead birds, to say the least. We'll just skip some of the details. But you have a number of different farms out there. Whether you're talking about turkeys, they had one. They had hens on another. Wholesale egg prices touched a record. $2.90 a dozen in April. Whole turkeys touched an all-time high of $1.47 a pound. Unfortunate timing with everything going on with food prices, with inflation, et cetera. And what they talk about is that no matter what happens in terms of wiping out their flocks, the way that this is spreading is you have birds flying overhead, they drop their feces, that feces somehow ends up on the foot or something and ends up in the cages of the birds, and so it's very difficult to prevent when you're considering birds are flying above, and just any type of feces or something like that can spread it. So keep your eye on that one, but that is not going to be helpful in terms of rising costs across the board. All right, what else we got up here? We got the jobs number. Yeah, I mean, jump into the same article that we wanted to talk about. You're talking about it shouldn't be surprising, but food prices hold near record as Ukraine war upends trade. Yeah, I'd say so. Global indexed eased slightly in April while holding near a record. You're talking about, pushing 160%, folks, from the level of 100 that we were trading at across the globe. Many different countries getting hit especially hard across the world. All right, let's jump around to some of the FANG stocks as we get ready for the opening bell. And we talked about Amazon. You're going to open down about $10, man. And it's just a dicey market, folks. I know I keep harping on it, but this type of volatility is very indicative of uncertainty. I mean, that's a great post, Peter. Maybe can I even download that? How do I do that? Yeah, I can save that image. Let's throw this one up. Downloads. It's just eerie when you get this type of volatility, folks. I'll have to pull that up. No, there it is. Perfect. So there it is. Is that it? No, that's not it either. Okay. I'll pull it up at the break. But you're getting markets, folks, anytime we've had bear markets, and it doesn't mean that that's what's going to happen. But when it does happen, you experience this type of volatility. You have these type of huge turnaround days. The first ones we were getting, remember the Nasdaq did like a 4 or 5% turnaround earlier in the year? Everybody was writing articles of what you could compare it to. Well, what you could compare it to most of the time, you're going back to 2000, you're going back to 2008 and stuff like that. So we'll see where we go. We got about 3.5 minutes to go until the start of trading, folks. But not much has happened since the highs of Wednesday. And when I try and consider, yeah, there's a possibility that they come in and swoop in for a buy here on a Friday. But would I be buying on a Friday to ride things out for the weekend? Thursday? We just play out of it. We just made lows we haven't seen in a while this week. Only 70 points off the low that we had early. See if we challenge it when we come back for the open. Stay tuned, folks. I'll be right back in.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you got an S&P opening negative 24 points. That's about 0.5% in the red. You get the Nasdaq 100 opening 75 points in the red right now, 0.6% in the negative territory. The Dow off about 0.6 as well. We jump to Apple. Apple this morning. Where are we? Down 0.3% for Apple shares. We jump to Microsoft. This market's moving around a bit. You're down a full percent from Microsoft on the open. Amazon down 0.8% right now. We jump over to Tesla shares, positive by about 1.24. We jump over to ARK, since a fan favorite, down about 1.3% for ARK. We jump around to some of the stocks with action. Draftkings, I'm going to start it off with. They were positive by 10%, folks. They had the quarterly results A loss in the quarter, but revenue better than expected with increase in monthly unique paying customers and average revenue per user, and they raised the full year guidance. DKNG is their symbol, up 0.5%, but man, they give back almost 10% from where you were. Not sure what's going on with the conference call, but what is going on is you're getting a market sell-off, and nothing's getting spared right now. Draftkings, negative on the session. Did you hear that, folks? They were positive by 10%, and just the fact that revenue better than expected, and really the key metrics for them probably are going to be monthly unique paying customers and average revenue per user and your forecast. I mean, they crushed it, and they're in negative territory, down 0.9% on that stock. Let's see how Penn is trading on their numbers, down 2%. At some point, these stocks will be a buy, just like the cannabis stocks, but not sure that's the case just yet, as I cannot find a bid, folks, from 142 all the way down to 35 for Penn Gaming. They're the owners of Draftkings. They also have tracks, so a little bit of a different, they're the owners of Barstool Sports, Penn is, and they have the tracks, horse tracks, different business model slightly to Draftkings, but both of them in the online gambling business. We jump to what else we have. Under Armour. Jumping over theirs, they were lower by 12.5%, probably in negative territory, but we'll jump over in a second. A loss of 1 cent a share. They were supposed to make money. Weaker than expected outlook for its full year profit as it absorbs the impact of higher cost and supply chain disruptions. UAA is their symbol. Yeah, I was going to say, if Draftkings was up 10% and they were in negative territory, then Under Armour was probably going to be down more than when they were, and they are down 20%, folks. Just remarkable that you're at almost the COVID lows after being at almost $28 earlier in the year. Watch out for this market, folks. Watch out. Shake Shack, they were lower despite a narrower than expected quarterly loss. Still have a loss. Companies with losses getting punished right now if you're losing money. Lighter than expected outlook as it deals with rising costs for beef. We covered chicken. We got a bird flu going on. That's going to cause some problems in terms of decreased supply. Shake Shack will pull them up. Down 3%. Look at that thing, man. You almost give it all back to the COVID lows as well as $30. You were at 138 on Shake Shack. This market's falling apart again, folks. Be careful. Virgin Galactic, lower in the pre-market after the company said it would delay the launch of its commercial spaceflight service until the first quarter of next year. Labor and supply chain issues. Tough go-around getting space tourism when you're dealing with supply chain and labor issues. SPCE is their symbol. Yeah, I haven't looked at this thing in a while, and no matter what it was going to say, I was going to say, stay away from this one, folks. You're down 9%. Amazing that this company got the acceleration they did with Branson going into space. They sell off shares. They raise money. Be careful. I would just not be touching that one at all. Better equities in this market that have pulled back, folks. DoorDash, out with their numbers, they were higher. Wider than expected loss, but the revenue exceeded estimates. Total orders topping 400 million mark for the first time. DASH is their symbol. Down 10%. This market. Oof. So, if you're losing money in this market, you're just getting punished, no matter what. And they knew they were going to make money, but that is the companies, and that's part of the reason why Amazon got punished. They lost money last quarter, and they said they might do it again. That is getting punished across the board right now in this market, folks. I put out the note yesterday to my subscribers, and just do some soul searching right now, and make sure that you're protected and that you don't need to preserve more capital, because it's not too late to preserve some capital at 4,100, folks. Okay, there's a human, the human emotion of fear of missing out is vicious, and the fear of thinking that you missed out is selling at 4,600 or 4,800 or wherever you think you missed out on some of the equities that have pulled back. But my dad said it well recently, folks. What you have is what it's worth today. That's it. Doesn't matter what happened yesterday, man. This market is falling apart before our eyes right now, and it's falling apart, okay, just to put things in context, from Wednesday's Fed Day on absolutely no revelations between yesterday and today. The market just gave back 5% in less than 48 hours on no change of economic data, indicators, or nothing. Nasdaq off 205, 1.6%, dropping like a rock to 12,651 right now. It's dicey, folks. Just make sure you're protected. Let's take a look. Looking at Etsy Siegel. Yeah, down another 4%, dropping. They had some real tough numbers on Wednesday, man. What, you had Etsy, right? You had Wayfair down dramatically. It's never good when the system starts getting low. That means slow. That means things are really escalating. Wayfair down another 9% right now. Bed Bath & Beyond down 3%. Best Buy had their what did I have from Best Buy? I had an article out here, I believe, from Best Buy. All right, let's jump a little bit away from the market. Man, this is going to be a wild one, folks. Nasdaq down 227. Let's see how Apple's holding up right now. Look at this. Apple's down. Okay, Apple's down 1%. Microsoft down 1.5. Amazon down another 2% to a 2,200 handle. Tesla down 2%. Tesla just lost $50 from the open. Let's see how ARK is trading. Down 4% to $45 and change. Yeah, yesterday's lows, bye-bye. Let's see how some of the banks are trading right now. They're definitely not down as much, right? Bank of America down 0.8%. I heard my dad's program last night. He was talking about AT&T was holding up relatively well yesterday. And great point. You know, if you're looking for places to quote-unquote hide in this market, you want to stay invested, you want your capital to be invested, you don't want to be in cash, look at what stocks are doing okay. Not even well, right? Look at what stocks are doing okay yesterday and today. Verizon, positive by 0.2%. It's cool. My mom has some Verizon in retirement account, folks. The reason why she does is because it's got some good dividends. They have had some serious problems recently for, to put it all in perspective, though. You were just at 54. You're at 48. You came into the year at 52. So you're down about 8% on the year. Strong dividend stock, though. You are positive on a day like today, as you have the Nasdaq down more than 2% right now. Let's take a look at this thing on the weekly, man. The Nasdaq just crushing through your 382. You're talking about the next low from March, 12,207, okay? And you're dealing with some big volume down there, but we are crushing volume right now, folks. This is quite a week that we're going to have. The week I have at the low, let me zoom in on this to get the actual number. March 1st, you're talking about 3.8 million or so. And let's see what we're doing right now. 3.1 million. So we'll see if we come into there. We may not beat that number on this low. 12,607, market down more than 2% in the Nasdaq. Wild stuff going on, folks. Yeah, they don't even wait for 10 a.m. What's going on? Gold contract right now, flat at 1875. We jump to notes and bonds. You're sitting right now down 9 ticks. We put it back on a 15-minute. You just look at that acceleration right at 845, man. Stay tuned, folks. We get the gold contract at 1875. We got a wild market on Friday. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps off 48 points, 1.2% in the red right now. You're looking at a Nasdaq right now that is negative by 1.6%. We're 70 points off of the low that we just had. This day is just starting, folks. The Dow right now off 1.1%. The Dow below yesterday's lows. Nasdaq 100 below yesterday's lows. S&P as well. We jump over to the Russell. Russell off 1.5%. Bitcoin, we catch a little bit of a bid as well, 35,670 as in a bid off of that low that we just got. Crude sitting pretty comfortably at 109 right now. Gold contract 1877, and we jump to the notes and the bonds. We're sitting right now negative by 5 ticks. You were talking about a yield right now on that 10-year of 3.1%. 3.1%. So a slight reprieve. I think we're sitting at 3.12. Yeah, 3.12. So maybe 2 basis points we've given up. But 3.1%, folks, as I said, what was the conversation of 2.5? What was the conversation with 3, right? Wasn't 3 going to be a nice round number that we might settle at for a bit when you talk about the 10-year potentially being oversold? We were in quite a downtrend channel. Very reasonable to expect that maybe that downtrend channel brings us to lower price and higher yield over an extended period of time. And we have slammed out of that channel to the downside, folks, and we just made new lows, and it gives no sign of slowing the acceleration so far. Yes, eventually you will get even a relief rally, but it hasn't come yet, man. And I'm not sure it's going to come on this Friday of this week, as we now have the S&Ps down 58 points. Dow off 400 points. Folks, the S&Ps, okay, the exact percentage, because I just did it, from 4,056, which is the intraday low on Monday, to the high we had at the end of the day, 4,303. You're talking about 247 S&P points, which off of that low represented a 6.09 percentage rise. And we are less than 30 points from giving it all back intra-week. I don't know how many times the S&P has traded up 6% intra-week and given it all back. We're not talking about the Nasdaq 100. We're not talking about the Nasdaq. We're talking about the S&P trading up 6% and trading down 6%. And then I want you to consider that there was really nothing too remarkable this week. You did get 75 basis points off the table. If anything, that should have given the market a bid, as was the indication on Wednesday. Nothing else. There was no inflationary data. We get CPI next week, okay? This was all already in the market. And yeah, there is a lot of momentum trading going on, man, whether you're talking about computers and whatnot. But there is also a repricing to a certain degree. I think it's hard to deny that that is going on when you get this type of volatility, because there's uncertainty, folks, okay? Market is unsure of how to price a company that's losing market money when you're trying to preserve capital going into a recession, potentially, when you have rates rising dramatically. We're only 15 minutes into the trading day, folks, and the Nasdaq's down 2%. So, Yeah, let's jump over to the VIX. I imagine you're getting quite a pop. Look at that, 34.67. It would make sense, as in you're coming right back down on the S&Ps to where you were at that price level on Monday morning. VIX going right back up to that price level. You take a look at the Nasdaq. Remarkably, we are below where we were on Monday. Yeah, I wonder what the percentage move is in the Nasdaq, because you're 1,000 points below where we were basically on Wednesday for the low in the Nasdaq, with the S&Ps down 1.6% right now, only 20 points away from a full 6% acceleration and give back. Pretty remarkable what's going on, folks, and it is very, very early in the day. All right. So we like volatility as traders sometimes, and it's a perfect time for our man Larry Pesavento, folks. He's going to be doing a live trading webinar. So this is a week from Tuesday, okay? So May 17th, it's going to be an all-day webinar, 9 a.m. till 2 p.m. It's an all-day webinar because Larry very rarely will trade the final 2 hours of the trading day. So instead of sitting in there twiddling his fingers for the final 2 hours, he has this webinar going on for the hours that he likes to trade, 9 a.m. till about 2 p.m. Eastern time. And man, quite a market to be doing live trading, folks. You can head on over to the front page of TFNN. This course, $295. It does come with a month of his daily Fibonacci 24/7 newsletter. That's a $97 value. So you're getting the course for about $200. It's 5 hours live. It's going to be in our new Discord room. Should be a great community with people able to really follow along for Larry. The technology is great. Larry's going to be in there with all of the webinar participants. If you are a current subscriber to Fibonacci 24/7, folks, your next payment is free. So you gain that free month as well. You're already paying for it. So the course really is $200 for you. I encourage you to check it out if you haven't attended one, folks. A great webinar, $295. That is a week from Tuesday, and we got quite a market, man. I just look away for what, a 60-second promo for Larry's live trading webinar coming off, and now we got the S&Ps approaching down 2%. We got the Nasdaq down 2.5% right now, and the Nasdaq did give up more than 1,000 points from where you were at. Yeah, some of these companies, man, losing money. Duffy, you're talking about Wayfair? Yeah, down another 12%, man, just dropping like a rock. Now, Draftkings down 7%. Look at that drop. They had some good numbers, man, but they are losing money. The market does not like losing money right now, folks. In the long run, you'll be fine. Free up some cash potentially for even some of those companies that you do like that are losing money, because, yes, you risk an opportunity cost, but there is the possibility that you get these at a much more affordable price. Now, here's what I'll say about Draftkings on the flip side of that, man. They're going to be around for a while. They are going to be a player. They're only worth $5.4 billion at this price point. You're down 8%. I imagine Draftkings is a company that's at least worth a few $1 billion. You're worth $5 billion right now. Nasdaq's down 300 points right now, the Nasdaq 100. Okay, but you got some serious pullbacks on a big way. Yeah, how about Restoration Hardware, the pullback there? Now, this is a Buffett stock as well. He's got quite a position, man. They're down 6%. This was a COVID darling, up to 744. You chop around for a period of about 7 months from April all the way through November. We're accelerating through the 618 after chopping around there for 2 months. Not what you like to see, down to 292 from 744. Great company. A lot of people were arguing that they were well positioned here in terms of high-end home furnishings, right? Maybe the high-end retailers will be the ones least hit by what's going on. There is no hiding in this market, as somebody just said in the den as well, folks. Everything's just getting sold. Jumping back to that 10-year, look at this. So even in that, look at this. We got a reversal. And what's that bringing yields to? 3.07. Just everywhere. The volatility is amazing, folks. Absolutely amazing. All right. Let's see what else we got going on. We talked about jobs. Yeah, Disney. Look at this number. So talking about Disney, talking about Florida. We do have Disney in my newsletter, folks. Hopefully they don't have to deal with, punitive punishment from Republicans and DeSantis in this state, but to underscore how much they're investing, $500 million for one roller coaster. Just amazing, man. So this thing is opening at Epcot. Disney will unveil one of the world's most expensive roller coasters this month at its Epcot theme park, underlining the importance of its Florida investment to the company and state of tourism. So it's a Guardians of the Galaxy Cosmic Rewind. It's going to climb into a 4-seat cockpit, turns 360 degrees. You're doing 60 miles an hour. Immersing guests. Story about familiar? I'll talk a little bit more about this when we get back to Thinkorswim.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the market right near session lows right now. Nasdaq off 2.5% right now. You're trading right almost to the tick, 1,000 points off of Wednesday's high in the Nasdaq 100. S&P's right near session lows as well, off 1.8%. Dow off 1.4%. We are right near the lows of Monday for the Dow. Nasdaq, as I mentioned, actually below the lows of Monday. S&P within about 15 points of a 6% intra-week acceleration higher and give back. Jumping back to Disney, as I said, everything getting hit. Disney off 3% right now. So jumping back to the article, it's interesting. Living in Florida, I've been talking about recently, we do own Disney in my newsletter, folks, disclosure. Magic Kingdom, right? Completely sold out. Many of the parks completely sold out when you're trying to go to Disney. I think Epcot was open the day I was looking. I said, I want to bring the kids to Magic Kingdom. You know, I want to do Magic Kingdom if I'm just doing one park. We're going to do that one first. Now, it's interesting that Disney probably pretty aware. I'm not the only one thinking that. So when Disney opened the park 40 years ago, this is talking about Epcot, they deliberately left out film and TV characters to differentiate it from the Magic Kingdom park next door. Well, now Disney's like, no, we need more of that. They're being remodeled to feature more stories from the company's deep well of programming and boost its appeal to families with younger kids. There it is, right? They probably realized that they're filling up capacity at some of the parks. Why not spread out some of that same experience to some of the other parks? And they're going to spend $6 billion with a B dollars for annual capital projected spending for 2022, dwarfing anything they've done. And this article also makes reference that they're going to make more money in that park's business than any other part of their business in here. Not sure where it was in the article, but for this calendar year, of course, as they're dealing with some woes on streaming. The market's just not stopping, folks. We're down 77 points in the S&Ps right now. And as I said, it's a tough week that we're having, and I'm not sure what the impetus is to step in and buy on Friday when you just have the S&P trading up 6% and giving it all back in a whim. And as I mentioned, folks, look where you are in this market. Look where your accounts have been recently. And I'm talking about recently over the last 5 years, because if you're thinking about preserving capital here, folks, look at where you were in 2019 to kick things off, where you were in 2020 to kick things off, where you were in 2021 to kick things off. Think about how you felt about those price levels and think how we're still well above that price level, man. But the S&P's now well below the 236, man. Next stop's the 382, 3,500. Totally in play. Make sure you'll be all right if we get to that level. Thanks so much, folks. Stay tuned. We got our man Basil's up next. Larry's got a few tech issues. He may not be live today. We'll see how that happens. But after that, live programming all